The Clarity Act is apparently at the finish line, and one of the biggest financial institutions in America says the unexpected.
Clarity has been the major fundamental catalyst we've been tracking all year, and to clarify, we do not think it's priced in at these levels.
That sounds incredibly bullish for Bitcoin, but at the same time, there's trouble brewing underneath the surface. The cheapest source of money in the world may be drying up. The same cheap source of money that inflated American stocks, the AI boom, global debt, and every risk asset on earth. So what does this mean for Bitcoin? What happens when its big legal catalyst arrives in the Clarity Act, but it arrives at the exact moment when the foundation underneath of global markets is collapsing? Today I'm going to show you why the end of Japan's cheap money machine could crush the most crowded trade in the world and drag Bitcoin down with it. And then I'm going to show you what happens next. Governments will be forced to create the exact conditions that Bitcoin was built to survive. The Clarity Act is opening the door and Japan is lighting the match. This is Dante Cook with Bitcoin Simply. Let's go. Let's start with the bullish news. The Clarity Act is closer to being passed than it ever has before. About a month ago, the Senate Banking Committee advanced the bill to the Senate floor. Then, for the past month and a half, we've been going back and forth between the Republicans and Democrats. And even despite this being talked about for the past 6 weeks, Jim Ferrioli believes that this isn't priced in.
So Clarity has been the major fundamental catalyst we've been tracking all year. And to clarify, we do not think it's priced in at these levels. We've been tracking the daily Clarity Act odds of passage in 2026, and we look at that with a consortium of different factors and see what's been driving Bitcoin's prices on a day-by-day basis. And in general, year to date, on average, Clarity Act odds, whether they're increasing or falling that day, can only really explain about 4% of Bitcoin's daily price move. And so we think that Clarity Act passage is not being priced into Bitcoin here. And I think that's important for two reasons. So first, if it gets delayed beyond summer recess, first, we think the odds of it passing before midterms are very low. Once you get back from summer recess, it's campaign time ahead of midterms. And so in that case, we don't think that would be a negative for Bitcoin's price. It doesn't appear to be priced in at these levels. The flip side, if it were to pass in the next couple of weeks, we think that is really serving as a legislative call option.
He calls it a legislative call option. The Clarity Act is going to draw a distinct line between what falls under securities regulation and what falls under commodities regulations. It gives exchanges, rules, and institutions a framework. And Jeremy Allaire explains exactly what this legal certainty is going to do.
Every major institution, every major bank, every capital markets firm, payments companies, enterprises, public companies can all now build on this infrastructure, treat it as digital cash in the economic system. And that's a huge opening up. And that's why, analysts, look at this from $1 trillion to several $1 trillion in the coming years.
So honestly, when I think about several $1 trillion of capital flowing into an asset class, I don't understand when I see price drops like this one. It means that people are trading and not investing, because all of these things are bullish for Bitcoin. Even Patrick Witt, the executive director for the Council of Digital Assets for the White House, says that you're actually fading this trade when the largest asset manager in the world is backing it. That's coming from the White House. But I'm going to ask the question that you're probably thinking. If the Clarity Act is so bullish, then why isn't Bitcoin already exploding? Well, Bitcoin is just a small part of a larger global financial system. Bitcoin still lives in the largest and most leveraged financial system ever in the history of the world. And something much bigger than crypto regulation is happening underneath of the surface, mainly Japan, one of the largest economies in the world, upon which it's the venture capital funder of global markets. And while you've never owned a single Japanese stock, it's actually dominated your portfolio for decades. Japan had the lowest interest rates in the world. People would borrow the yen, convert it to dollars, and then use those dollars to invest into American assets. Treasuries, stocks, tech companies, you name it. Real estate. That's the yen carry trade. So the Bank of Japan basically became Silicon Valley for the world and funded everything. But the problem is, when it exported cheap money, it imported inflation. Their imported food, their imported energy, it's bringing the cost of living so high that their own economy is crippling. And what it did is they sacrificed the purchasing power of their own citizens. And Japan appears to be asking a different question right now. What if we used our capital to rebuild Japan instead of the rest of the world? And so Japan's prime minister has said effectively they're looking to offload trillions of dollars of assets from other places back into their economy. Here's a great synopsis of this overall thing in a great conversation between Nolan and Opti on the Simply Bitcoin live channel yesterday.
I'm wearing my pro-Japanese Satoshi Nakamoto hat here. Indeed, the fiat, the way the whole yen carry trade has worked, the subsidy of the US dollar around the world, really was provided by the loser of World War II, Japan. And Japan, having lost World War II, was bound up in this American system that existed, not really the American system, more like the London financialized system that came from the Federal Reserve. And so Japan was put in subordination to the US system. Now, the story that we've been seeing from the beginning of this Trump administration was letting the Federal Reserve out of this role where they subordinate the Treasury. They're recalibrating the American system so that the Federal Reserve ends up being subordinate to the Treasury, which reignites this American system engine. Quite similar to what we're hearing from the Bank of Japan here. They don't want to be involved in this London system anymore. They don't want to be involved in this hyper financialized fiat system. They want to have actual production. So we've been seeing this for a long time. Now, what we understand from, as Bitcoiners, why the Satoshi Nakamoto pseudonym was there was because eventually what happened to Japan, all of this decade of darkness in the 90s, the yen carry trade, the inability of Japan to really create any inflation, to put interest rates up because everyone was using the yen as the subsidy for the US dollar, with that now coming to an end, with that era coming to an end, we as Bitcoiners understood and had predicted for a long time that the canary in the coal mine would be the yen carry trade winding up. Now, what does this mean for tomorrow? I think very simply, they're just going to go back to the Fed system.
The story is this worldwide subsidy may be ending. And so the question is, what happens to global asset prices when this trade unwinds? People have to sell the assets that they bought, convert the money back into yen to repay their loans. So all of the assets that benefited from cheap capital, mainly AI, will be the biggest impacted. And that's the large story. What happens to global assets when the easy money to be made in AI is over? And that's exactly what Jordy Visser thinks.
The AI trade's over. And let me as someone who basically has subscribers that pay attention to AI, it's not that AI is over. It's that the easy money of it is done. The ability of getting 7-8 times your money in that is over. Now you get into the grind of, oh my gosh, 30% a year is horrible. No, 30% a year in the AI infrastructure trade is going to be great.
AI is real. The technology is real. The improvements in productivity are going to be enormous. However, there are clear signs that this thing doesn't actually work. Mainly the circular economy. Take a look at this story right here. NVIDIA is in talks to finance a $250 billion data center in Ohio that's being built by SoftBank. They're going to have a $350 billion line of credit, so OpenAI, who can actually fund their own purchases, will be able to buy NVIDIA chips. The power will be controlled by the U.S. government, and it will be supported by a Japanese natural gas project. Oh, and if it wasn't already weird, Howard Lutnick is going to be picking where this federal land or this federal project is going to be placed. These financial shenanigans are going all the way up into the top. And this tells me that there is panic in the system. This financial system doesn't work. And this global AI trade, the hype cycle, cannot crash. Because if it crashes, the market crashes. And we're going to go into exactly what that is going to look like right after we thank our sponsors. Ledn, the leader in Bitcoin-backed loans. If you want to remove your capital from the system, well, one of the best ways you can do it is with your own Bitcoin purchases. You can borrow against your Bitcoin and become your own bank. You can borrow dollars against your Bitcoin stack, and that Bitcoin that you post to the Ledn platform isn't relent out or rehypothecated. You can borrow up to 50% of the value of the Bitcoin that you post onto the platform, and it can be in your account in less than 6 hours with no credit checks, and you can repay it or top it off at any time. I'm a customer of Ledn. I use their product all the time. They've never lost a single cent or sat of money. They're the most trusted source in global finance when it comes to Bitcoin-backed loans. Get started with Ledn today by using the link in the description. And if you want to remove yourself from the financial system, but don't know how, well, you should get a coach from the Bitcoin way. They've coached thousands of people on how to have sovereignty in their Bitcoin journey. How do I run a node? How do I hold my own keys? What happens if I lose a key? What's a single sig transaction? What's a multi-sig transaction? How do I back up my Bitcoin passphrases? All of these things are incredibly important, but it's hard to do when you're just looking at YouTube videos or trying to do it on your own. So get a coach from their team. They'll walk you through how to become a sovereign individual. So hard questions get asked when you come to the end of these cycles. Where are the profits? Who's guaranteeing the debt? Who's assuming the risk? Who's going to get left holding the bag when this whole thing blows up? And this is why some people are predicting a massive drop in the S&P 500, especially if the AI trade blows up. Listen to this clip from TFTC's podcast.
There's forces of nature out there that are more powerful than central banks, and one of them is that real live economic downturns are not stoppable. Real live market corrections from profound overvaluation are not stoppable. They can be delayed, they can be stalled, they can be made more overvalued, but they're ultimately not stoppable.
Yeah.
And it's like the death of currencies, right? They're not stoppable either. What happens if we get a 75% correction in the S&P? What the hell is society going to be doing then?
They're not going to allow it. Like, that'll never happen, I don't think.
They don't have the control over it, Marty.
You don't think so?
No chance.
Well,
there's never been an asset class in history that got overvalued that didn't find its way back to cheap.
No.
Never.
A 75% correction in the S&P 500 is a bit extreme, but the warning does deserve attention. The market is concentrated in overly indexed and overly valuing AI companies, which clearly aren't making money. And so what happens if this scenario actually does play out? When there's margin calls, when there's panic, when there's collapse in the market, eventually people are going to come knocking on the Fed's door. Everyone's going to turn to the Fed and say, what are you going to do about it? We already know the answer.
You know, they're debating this thing so seriously and so intelligently. They've got all these great minds thinking about the problem. Oh, horseshit. I mean, they all know that they need to print money or the whole thing's going to collapse. But they want to make it seem like there was a debate about it. And people say, well, he's got to get the votes. When in the past history of the Fed has the Fed chairman not been able to get the votes? I mean, if you read my book or you read about the Thomas Honig story or, you know, Alan Greenspan, all of these guys, the chairman calls the tune and he bullies the rest of the people into doing what he wants to do.
Larry's prediction is that Kevin Warsh will ultimately cut rates, and he could do it as early as September. The structure of the system ultimately dictates that policy every single time, no matter what they say, no matter how they deliberate. That is the outcome. And so what happens when Japan stops exporting cheap money? America is going to create its own liquidity. It's going to implement regulatory changes and build new collateral rules, all through the Clarity Act. The objective is the same, no matter if they call it the Genius Act, the Clarity Act. The goal is always the same. Keep the machine running. And that is precisely why Bitcoin will win in the end. Bitcoin can fall during liquidations or short market term events, but over the long term, it will always benefit. They will intervene, they will create money, and it will weaken the unit protecting the system, whether it's the Japanese yen or the US dollar. And every intervention makes the permanently scarce assets more important. Here's a crazy thought. What if the first nation, large nation, to adopt Bitcoin isn't going to be America? What if it's actually Japan?
They're going to have to adapt. The Bank of Japan is going to have to adapt its balance sheet. The government of Japan is going to have to adapt its balance sheet. They're going to have hard collateral on that balance sheet because the yen won't work anymore. Their government debt won't work, and them buying American government debt won't work. So
the Clarity Act might be the thing that sends Bitcoin higher today, but ultimately, it is the new financial rails upon which the U.S. government will need to print and intervene into a collapsing system. The legislation is simply opening the door. Japan is the catalyst. If you get value from these episodes, do subscribe to the channel. We drop fire news like this 7 days a week. You're not going to get the content and personality and the delivery from any other news channel like this anywhere else. So subscribe to the channel. And if you haven't already started stacking sats by not just buying them through an exchange, consider doing it through Bitcoin mining. And not doing it yourself, but using one of the leaders like SAS Mining, the leader in Bitcoin-backed mining. They actually mine your Bitcoin with 100% clean, free, renewable energy. They maintain all your machines, they keep your power up, and they just send sats straight to your wallet. There's great tax benefits and something you should consider if you already haven't. Schedule a meeting with their team, and they'll tell you exactly all about it. This is Dante Cook with Bitcoin Simply. Happy stacking.